You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Hi, everybody. This is Peter Schiff. I know it's been a long time since I did my last podcast. I'm sorry about that, but I've been traveling quite a bit. In fact, I'm taking time out to do this podcast from a cruise ship. Some of you might know, I mentioned it on the podcast. I am taking part in the Real Estate Investors Summit at Sea. So we are on the Celebrity Beyond, having a good time on this cruise. We're actually in the iconic suite. It's quite nice. You could check it out on the internet. I recommend it if you're ever taking a cruise. I mentioned, and this is kind of funny, but I mentioned on the podcast, several weeks before the cruise, that I was going to be in the San Francisco area flying net jets to Miami, which is where the cruise left from. And I said, if anybody who listens to the podcast ends up going to the summit at sea, they could fly over with us in the jet because there's a lot of extra seats. And we had one couple took us up. A client of Europe Pacific Asset Management signed up to be a participant in the summit at sea, and so they flew with us. But what was funny is that the pilot of the jet that we were on just happened to be a Europe Pacific Asset Management client and a Schiff Gold customer, and he listens to the podcast on a regular basis. And so when we came out of the plane, or when he saw in advance who was flying, he knew that it was me, and he was very excited about that. Such a small world that the pilot just happened to be a fan of my podcast and a client. And so that made the flight even more interesting. We spent a little time back in the cabin, talking economics with the pilot. He's a real Austrian economist, a total, Peter Schiff type of guy with the same type of political philosophy, economic philosophy, which is why he's a client of mine. But it just shows you what a small world we're in. Anyway, I want to start talking about some of the things that have been happening since I did my last podcast, because a lot of stuff actually happened. In that, what's it been? A couple of weeks, 2-3 weeks since I did a podcast. One is, there was a war in the Middle East followed by peace, right? That was probably one of the biggest events that happened. Is you had Israel launching missiles into Iran, starting what could have been a big war in the Middle East, but ultimately it ended almost as quickly as the reciprocal trade war ended. With the U.S., dropping these bunker buster bombs in an area where we believed the nuclear weapons were going to be made, or the uranium enrichment was taking place, and so apparently we set back Iran's nuclear program by many years, and the war's over. And there was a lot of volatility, particularly in the oil markets, but also in the precious metals markets, surrounding the outbreak of that war and then the peace. Now, who knows? I'm going to give Trump the benefit of the doubt at this point, because I don't really have any contradictory information. I do know that I am very skeptical about the U.S. government and anything that it claims to be the truth with respect to weapons that other countries may or may not possess. I still have a sour taste in my mouth from the weapons of mass destruction that Saddam Hussein never had. and we had an entire war. I recognize this is a different president, but I still remain skeptical of these type of claims. I know that there have been claims about Iran being just around the corner from having a nuclear weapon for, 25 years, and they still don't have one. So I don't know if they're any closer, or they were any closer, a week ago, as they were, years ago. But maybe that wasn't the case. I mean, maybe something has happened, and this time they really were close to a nuclear bomb, and or being able to construct one. And so, maybe we did the right thing. I don't know, but I'm thankful that the war is over, if it in fact is over, and that if Iran was close to, being able to, develop a nuclear weapon, I'm glad that they can't, right? So that's a good thing. But I don't think any of that is really relevant to the bigger macroeconomic picture that I want to spend most of this podcast talking about, because that's where I think I have a much better handle on what's going on, and I have a lot more value to interject into the conversation. I mean, I'm not a military strategist. I've always been against the U.S. getting involved in these overseas wars, in nation building, in installing new regimes to replace the regimes that we potentially don't like. We've always wasted a lot of money. There's been a lot of unnecessary loss of life. And so I've always been against this interventionist type of foreign policy. But at the same time, I'm not comfortable with Iran having a nuclear weapon if, in fact, they were, about to be able to produce one. I don't know. But I want to talk about stuff that I know for sure is true, and that I think is a real threat right now to the U.S. economy, to the American way of life, to our financial markets. And so I'm going to start talking about those issues. Now, one of the big things that happened, too, over the last couple of weeks is the movements in the financial markets. I mean, first of all, as I'm recording this podcast on Friday afternoon, the U.S. stock market just closed just under a half hour ago. So this is not coming live as I normally do the podcast, because the internet on this ship is not that great. So I didn't trust doing this live. So I'm recording it, and then I'm going to upload it. We have Starlink on this ship, and it's probably going to take a while to get this podcast uploaded. But I am recording it live, and it's going to go, straight up through the cloud to YouTube and to Schiff Radio. But the stock market, the not the Dow Jones, but the S&P 500 and the NASDAQ are at new record highs. So all of the losses post-Liberation Day have been erased, and we are at new highs. The Dow is not quite up to a new high yet, neither is the Russell 2000, but you have the S&P 500 and the NASDAQ led higher by big tech, right? The Mag 7 stocks have come back to life, and they have led the markets to new highs. But don't be fooled, because while the U.S. stock market has been going up, the U.S. dollar has continued to go down. Not only did the dollar not regain any of its post-Liberation Day losses, but the dollar is actually even lower now than it was. The dollar index closed at a new low. In fact, it hit a new low intraday today. I think it closed just above 97 on the dollar index, about 97.3. The euro closed the day above, and the week above 117. On Liberation Day, we were about 104, if I recall. The euro is now up 13% against the dollar so far this year, and it's not quite halfway over. In fact, the dollar is having its worst first half of a year in decades. And so it's been a long, long time since the dollar has been this weak. That is very significant, especially, and I'm going to get to Powell and the Fed in a moment, but that's especially true when you're hoping to bring down the inflation rate. And when you're not really sure how tariffs are going to impact prices, we know that the exchange rate will. Because if the euro is 13% higher than it was when the year began, that means everything that we import from Europe is going to be 13% more expensive just on the exchange rate. Forget about the tariffs, right? Even if the tariffs weren't there, we'd be looking at 13% higher prices to buy stuff from Europe. Now, of course, the tariffs are going to be on top of that. But if you recall what guys like the Commerce Secretary, Ludstrom, or even, I think, Bessent, the Treasury Secretary, and Trump, they were all telling us that one of the reasons that we weren't going to pay the tariffs, that the world was going to pay the tariffs, was because the dollar was going to get stronger because of the tariffs. And so that would make imports cheaper, that our trading partners would eat our tariffs in the exchange rate because their currencies would go down relative to the dollar. Well, not only did that not happen, the opposite of that happened. The dollar went down, not up. And so now a weak dollar is going to augment the impact that the tariffs have, not offset it. So we're going to get a double whammy. We have to pay the tariffs and we have to pay more to buy the products because the dollar went down. And in fact, look at the dollar against the Swiss franc. The Swiss franc broke below 80 cents, or the dollar broke below 0.8 Swiss francs. So you need more than $1.25 to buy 1 Swiss franc. This is the lowest it's been since 2011. But if we fall about 3% from here, maybe even a little less than that, the dollar is going to be at the lowest level it's ever been in history against the Swiss franc. And that is a significant decline for the dollar. In fact, if you go back to when the Swiss franc, first floated against the dollar in 1971, when we, went off the gold standard, the dollar has lost more than 80% of its purchasing power against the Swiss franc. The Swiss franc was only 23 cents in 1971. You could buy a Swiss franc for 23 cents. Now it takes $1.25 to buy a Swiss franc. Now, of course, the Swiss franc has also lost purchasing power over that time. The cost of living has gone up. The price of gold has gone up a lot in terms of Swiss francs, but not nearly as much as it's gone up in terms of US dollars. But again, the dollar is just not down against the euro and the Swiss franc. In fact, against the Swiss franc, the dollar is almost down 15% on the year against the Swiss franc. But it's down against the pound. I think the pound's up about 11 or 12% this year. Even the Japanese yen has bounced back 7 or 8% higher this year against the US dollar. So the dollar is going down across the board, and it's going to continue to go down. Also, what's happened since my last podcast was we had a huge breakout in silver and platinum. Platinum in particular, about 6 weeks ago, I did a podcast in which I specifically pointed out what a great buy platinum was, because platinum was under $1,000 an ounce and gold was trading over 3,000. So I pointed out that you could buy 3 ounces of gold with 3 ounces of platinum with a single ounce of gold. Now, for most of my life, platinum was more expensive than gold. So now, not only was platinum cheaper than gold, but it was so cheap that you could buy 3 ounces of platinum for 1 ounce of gold. And so I said, this is a ridiculously low price for platinum. And I specifically recommended that people call up Schiff Gold and buy some platinum. Well, yesterday, platinum traded for over $1,400 an ounce. I think it got to like $1,425. That was a 40% increase in the price of platinum just since I recommended it on this podcast about 6 weeks ago. Now, today, platinum was clobbered by $85. So it closed at $13.45-ish. So a big down day. In fact, all the metals had a big down day. Silver was down about 60 cents, or 75 cents, excuse me. But it closed at around $35.90. The last time I did a podcast, silver was still below 35, and 35 was major resistance. Well, we had a day between the last podcast and this one where silver was up almost $2, and it blew through 35 and went through 36. In fact, since my last podcast, silver almost traded $37 an ounce. Now, today was a big down day, 75 cents, and we closed the week just below 36. In fact, this is the lowest we've been since breaking out above 35. We closed at 35.90. Gold was also down about $60 today, closed around 32.75. The reason I believe that we had the weakness today in gold and silver, in addition to the fact that we've had a lot of strength in the stock market, and I think that's been a bit of a headwind, and that's why I think gold hasn't already made new highs, is because there's a lot of optimism now as people are moving back into these tech stocks, and so they don't feel as much of a need to have a risk-off hedge position on like gold. They're piling back into these risk assets. Was all the stories about progress on the trade front. Trump came out and said something about having a new deal with China. And look, I don't believe there's any deals going on. I mean, all the deals are is both sides agree to keep talking because they potentially might agree to come up with a deal or to agree on the terms of negotiating to come up with something. But they don't actually come up with anything because really all they're trying to negotiate is to move away from what has been imposed since Liberation Day. We're just trying to bring the tariffs back down to where they were. We're trying to get China to open up its rare earths and its batteries and the things that we really need to buy from China that they were happy to sell us until Trump started this trade war. And now all we're trying to do is get back to where we were. But somehow this is going to be this great victory if all we can achieve is the status quo that we had before we launched a trade war that we couldn't win. But I think that talk, plus there was also something coming out of the White House that we're close to deals with Europe. We've got all kinds of supposed trade deals that we're about to sign. And this is just in time because the 90-day pause, right, that we instituted, that Trump called for after the bond market, started collapsing, getting yippy, in Trump's words. And so he called off the reciprocal tariffs. It was a 90-day pause. And that pause is maybe about 2 weeks from being up. And so I think the fact that the White House was floating the news, I think, started yesterday or this morning, that we're very close to these deals with a number of European countries or maybe the entire European Union. I think that not only helped the stock market rally today, but I think that's a reason that we had the sell-off in gold. So we had a sell-off in gold when, we had the ceasefire with Israel and Iran, and oil prices came right back down. They had spiked up to $75 a barrel, something a little bit higher, I think, and then they collapsed back down to 65 when nothing happened. And gold got caught up in that, and I think we got a little bit more selling. But the significant thing is that both gold and platinum broke out relative to gold, and they broke out above some major resistance levels. And I think this is a bullish thing. This is bullish for precious metals. It's not just a gold rally now. It is a precious metals rally. We've got all the metals rising, palladium as well. And in fact, copper, which pulled back today, copper was back above $5 a pound yesterday. Copper's up 25% on the year. So we're not talking about just a precious metals market rally, just a safe haven rally, but the industrial metals are going up. Why is all this happening? This is all happening because of a weak dollar. This is happening because of inflation, which is also ironic. And I'm going to get to that in a minute. But, you have such a weak dollar, you still have so many people talking about how inflation is gone, how the inflation problem is solved. Everybody in the Trump administration is talking as if we've already achieved the 2% inflation target, right? And nobody can figure out why this idiot, this moron, right, this numbskull, this very stupid person, and these are all specific words that Donald Trump has used over the past couple of weeks with respect to Fed Chair Powell, because he's saying that how could Powell be so stupid, be such a numbskull, be such an idiot, not to be cutting interest rates. And he's talking again about having to fire Powell, because after all, how could we allow this complete and total moron to be Fed chair for another year. I mean, once you've accepted that the chairman of the Federal Reserve is a moron, well, you got to get rid of him. I mean, how could you allow a moron to be running the Federal Reserve? And there is a lot of talk that Trump is going to nominate somebody like a shadow Fed chairman, maybe in the next couple of weeks. But the point is, he may try to install that Fed chairman early and not allow Powell to serve out his term so that we can have rate cuts sooner, even though the Federal Reserve is indicating that rates are going to come down. Sometime between now and the end of the year, we're going to get a couple of rate cuts. So what's the point of even replacing Powell? And remember, Powell is just one vote. We had an FOMC meeting this week, and it was unanimous not to cut rates. So he's not the only moron on the FOMC. Apparently, they're all morons because none of them voted to cut rates. And I don't know how simply changing the Fed chairman is going to change the minds of everybody else, because supposedly these are independent thinkers. If they disagreed with Powell, if they thought that rates should have been cut, then they should have voted for cuts. But apparently, it's just a bunch of stupid people on the FOMC. Now, I got a lot of problems with the FOMC, and I think they've made a lot of mistakes, but not cutting interest rates isn't one of them. In fact, rates are still too low. They should be hiking interest rates, especially if you look at what's happening with the dollar, if you look at what's happening with commodity prices. It's obvious that inflation is bottomed and is headed back up. If we really had an independent Fed that was doing the right thing, they would not be talking about rate cuts, but about rate hikes, especially if you look at how Powell continues to describe the U.S. economy. And he did that again this week when he testified in front of Congress. So in addition, to not moving interest rates up, he testified this week, yesterday, the day before, in front of Congress. That's more what I wanted to talk about because that was more recent. But he talked about how great the economy is, and he talked about that at the FOMC meeting when they didn't hike or they didn't cut, and he talked about it in front of Congress, the House and the Senate. If the economy is so strong and inflation is still stubbornly high, if we're still above 2% and it looks like we may be headed back higher, why isn't the Fed hiking rates, right? If we got such a strong economy with such a strong labor market, which is what Powell maintains, and interest rates are still historically low, why aren't we raising rates? Why aren't we making sure that inflation goes back down to 2%? I mean, Powell is trying to get people to believe that inflation is just going to continue to fall back to 2% if we just keep rates where they are. Well, why should that happen? Rates are not historically high, but when you factor in what's happening to the dollar and what's going on with the budget deficits and where they're headed, it's clear that inflation is moving higher, and what the Fed should be doing is hiking rates. But everybody is trying to pressure the Fed, and it's not just Powell. I mean, it's not just Trump, rather. But you've got the head of Fannie and Freddie, who has been going on a tirade, both on X and on the financial news and regular news. This guy Pulte has been talking about how the Fed is screwing up the housing market, that he's making housing more expensive than it should be, and he's keeping people from buying homes. He's keeping people from being able to sell their homes and buy new homes because he's keeping interest rates too high. What a lot of these guys don't get, like Pulte, is that if the Fed did cut interest rates, not only is there no guarantee that mortgage rates wouldn't go down, they'll probably go up. In fact, mortgage rates are higher now than they were before the Fed started cutting rates. Remember, the Fed lowered short-term rates by 100 basis points, but that caused a 100 basis point increase in long-term rates. So how do we know that when the Fed starts cutting rates again, that long-term rates might start rising again? In fact, that may be the main reason that the Fed isn't cutting rates. Maybe they realize that if they do cut rates, rates are going to go up, and they're afraid of that happening. They're afraid of the market realizing that that's going to happen. So the best thing they can do is nothing, because now they can maintain the delusion that they have the ability to lower interest rates. Everybody thinks that they can bring interest rates down, but if they cut rates and they go up instead, then everybody will know the truth. And so the Fed doesn't want the market to know the truth, so it just stands pat. And Powell is pretending that the only reason they're not cutting interest rates are the tariffs. And I want to get into that because I want to talk about what was said at the testimony, that Powell's testimony before the House and the Senate, which of course, you know, all this is political charade here, theater. You have all the Republicans blaming the Democrats blaming the Republicans blaming the Fed, the Democrats in a way trying to defend the Fed but attack the Fed at the same time. But the most important stuff that Powell said, you know, seems to get lost on the mainstream media, and I'm the only one that I think is really picking up on it. So I made a list of some of the points that Powell brought up. One of them, he was asked a question about the balance sheet, and you know, if the Fed's going to get the balance sheet back down to, you know, the 4 trillion, which is where it was before COVID, right? No one's asking Powell if they're going to get it back down below $1 trillion, which is where it was before QE1, QE2, QE3. Because if you remember that when Bernanke came before Congress, and most of the congressmen were the same people, right, that were around then, because it's hard to get rid of these guys. But when Bernanke testified before the House and the Senate, and he was asked whether the Fed was monetizing the debt, because that was the concern, because that's what we were doing. The Fed was printing money and buying bonds. Powell said, no, we're not doing that. We're not monetizing the debt because we're not permanently adding these bonds to our balance sheet. We are going to sell these bonds when this emergency is over. See, this is just a temporary measure because we're in a financial crisis. But once the crisis is over, right, well, we're just going to sell all these bonds. The Fed's balance sheet is going to shrink back down to below $1 trillion because we're not a banana republic. We would never do something like that. We would never just monetize debt, right? That's not what the United States does. So everybody believed Bernanke, except for me. If you recall, or if you don't, you could look it up. But I specifically said that he was lying. I knew that the balance sheet would never shrink back down to where it was before they started QE. I knew it from the beginning. I knew that Bernanke was lying because I knew what it would mean to the economy in the future if the Fed ever did that. So it's easy to talk about something that you may do in the future, but it's very different to actually do it when the consequences are going to hit. So yes, just like spending cuts. Oh, we're going to cut spending in the future. But then when the future becomes the present, they don't cut spending because then that's going to bring about some type of problem that they don't want to deal with. Talking about doing something in the future doesn't really create any problems. And so Powell was able to pretend that America was different from banana republics by claiming that we're just going to sell these bonds in the future. Well, the only difference really between America and a banana republic apparently are the bananas, because we are monetizing the debt. And that's exactly what Powell admitted if anybody was paying attention. He said, no, we're not going to bring the balance sheet even down to 4 trillion. He said that we are now in an ample reserve regime. Ample reserves. In other words, we're in a banana republic regime. Powell said that it would just be too disruptive and too problematic to shrink the balance sheet all the way down to 4 trillion, which is still more than 4 times what it was before QE1 and more than 4 times where Bernanke promised Congress that he would, shrink us back down to. So this ample reserve regime means that we did monetize the debt, that Bernanke was lying, either intentionally or, he just was wrong. He thought we were in a banana republic, but it turns out that we were, because we're never going to get rid of these excess reserves. And Powell said we want them. We like having all these other reserves, excess reserves. That's because it's impossible to get the inflation that the Fed unleashed to get rid of that. We cannot mop up all that liquidity without creating an even worse financial crisis than the liquidity was initially injected into the economy to mitigate, right? We were trying to stimulate the economy after the bursting of the housing bubble and that financial crisis. But now to withdraw that stimulus would actually create an even worse crisis than that one. That's why we never should have done it. That's why I was so opposed to it at the time. Now, another thing that Powell said about the debt, because he was asked a lot of questions about the national debt. And the only thing that he said was that we're on an unsustainable path. And he repeated a number of times that he's only saying what his predecessors had said. He said, all I'm going to say about the debt is exactly what all my predecessors have said, which is that we're on an unsustainable path. Well, first of all, he's not bound by some kind of precedent that was set by his predecessors. Just because his predecessors, didn't want to issue any other warnings other than that robotic, well, we're on an unsustainable path, that doesn't mean that he has to make the same mistake, especially since we're obviously much further down the path, right? So if Janet Yellen or Ben Bernanke or even Alan Greenspan was commenting 10, 20 years ago that we were on an unsustainable path and we've been traveling down that path for all these years, you would think that Powell would have to say something different. Like, you know what? We've been traveling this path for an awful long time. We're very close to a crisis here, because clearly the warning of the path is unsustainable hasn't done anything, right? So none of the Fed chairmen that have issued that warning, right, told Congress we're on an unsustainable path. That has done nothing to alter this path, right? Nobody has said, we've just been told by the chairman of the Fed that we're on an unsustainable path, so let's get off the path. What Congress hears when they hear this is, we don't have to do anything, right? Because the Fed chairman just said there's nothing to worry about. Yeah, we're on an unsustainable path, but who cares about that? Because who knows how long that path is, and I may not be in office by the time we get to the ultimate sovereign debt crisis, right? So what Powell should be doing is recognizing that what his predecessors were doing did not work. And he needs to issue a much stronger warning to Congress about the collapse that we're headed for, that we got to get off this path. And again, it's not just the path that's unsustainable. It is the debt. The only reason that we can pay the debt is because interest rates are still low. Everybody wants interest rates to be lower to make it even easier to service the debt. But the reality is rates are going a lot higher from here. They should be a lot higher from here. And when they do get a lot higher, we can't sustain the debt. We have already arrived at the point of no return, as far as I'm concerned. It's no longer about the path, right? The path is in the past. We've arrived. We have a massive $37 trillion national debt, which is actually much bigger than that. Who knows where it is right now, because they're not even keeping track accurately. And the only reason we haven't imploded is because interest rates are still in the 4s. But what happens when they're in the 6s or in the 8s or double digits? Because that is where they're headed. But Powell can and should be critical of what Congress is doing, but he hides behind the independence of the Fed, and he says, I don't comment on fiscal policy. It's not my place. It's not in my lane. Well, sure it is. That's exactly what he's supposed to do. Independence doesn't mean you don't criticize. Independence means you're free to criticize. What the hell is he doing there? Why is Powell even testifying in front of Congress if he can't answer questions? Because a lot of these guys are legitimately asking for his opinion. They're saying, hey, what's your opinion on the big, beautiful bill? Right? And he said, well, I'm not allowed to give my opinion. Sure he is. They want to know. They're asking him, what is the impact of this bill going to be on the deficits? What's the impact going to be on inflation? He says, I don't know. I can't say. It's not my place to say. Of course it's his place. He's the chairman of the Federal Reserve. Especially when you consider his mandate of price stability. He says we have a mandate of keeping inflation low. Well, if large budget deficits are going to complicate that mandate, right? If the passage of the big, beautiful bill is going to make it harder for the Fed to keep inflation down, why doesn't he say that? Why doesn't he say, don't pass this bill? We need more spending cuts. The deficits are too big. The big, beautiful bill is going to make them bigger. We're on an unsustainable path. I just told you that. The big, beautiful bill just means we travel that unsustainable path even faster, right? Not only don't we change course, we speed up. Why doesn't he say that, right? He's afraid. He doesn't want to criticize anything the government does. Apparently, the only thing he's willing to criticize are the tariffs, which is really pissing off a lot of the Republicans, because Powell basically said that the only reason that rates haven't been cut is because of the uncertainty surrounding the tariffs. Not the tariffs themselves, but because the FOMC members have no idea what these tariffs are going to do to inflation or the economy. And so because they don't know, they're just going to do nothing until they figure it out. And, I think, first of all, this is doing a disservice to the Fed, because it is making it look like the Fed is, in a way, being political, because they're focusing on tariffs, whereas they ignore massive deficits. I mean, the big, beautiful bill is much more inflationary than the tariffs, right? But he doesn't want to criticize the big, beautiful bill. They're not holding off on rate cuts because of massive deficit spending of the big, beautiful bill, but they are bringing up tariffs. Look, there's a lot of reasons that the Fed should not be cutting rates. In fact, they should be hiking them. It's not the tariffs. But I think that Powell and maybe the rest of the FOMC is trying to find a way of blaming Trump for the inflation that they've created over the years. Because even if there were no tariffs, they shouldn't be cutting rates. Inflation is going to get worse, not because of the tariffs. I mean, maybe the tariffs will exacerbate the problem by keeping more of our dollars in the U.S. and not going abroad. So we'll have more money chasing fewer goods as a result of the tariffs, and that will push up consumer good prices at the expense of asset prices, right? That's what will probably happen. But the real source of inflation is the Fed and all their money printing and quantitative easing and artificially low interest rates. It's their inflation chickens that are coming home to roost. But Trump is giving them the ability to blame it on the tariffs, right? So when inflation does come back, which it's going to happen, they can say, you see, we had kicked inflation's butt. We did the right thing, but it's those pesky tariffs. The only reason inflation is coming back is because of the tariffs, right? So they kind of get out of jail and they can blame Trump. But of course, Trump sees this. The Fed is blaming their failure to cut rates on his tariffs, which means they're blaming Trump, which is, I think, one of the reasons that Trump is, firing back and why he's so angry at Powell, who is clearly blaming him for not cutting rates and who is setting him up to be blamed for the resurgence in inflation, because they're going to blame it all on tariffs, because they have identified no other problems. In fact, he was asked about the dollar's decline and to comment on the fact that, this is the weakest we've seen in decades for the dollar, that the dollar is at a 3-year low. And he refused to comment on the dollar. I mean, he said, well, that's up to the Secretary of the Treasury. He sets the dollar policy. I have nothing to say. Again, I can't talk about the budget deficits because that's not in my lane, or I can't talk about the dollar because that's not my lane. Well, what the hell is this lane, right? I mean, if his lane is price stability, then two of the most important things that are going to weigh on that are budget deficits and the dollar, right? I mean, if you're trying to figure out inflation and what's going to happen to prices, what else do you look at but the deficits and the value of the dollar? And those are two things that not only won't he comment on, he said he doesn't even look at it. Powell said that they just take fiscal policy, as is. That they make their own policies and they ignore what's happening in Washington. How can they do that? How can they ignore the massive deficits that would be crowding out private investment, which would be bad for productivity, and deficits which ultimately they're going to be called on to monetize? How could they ignore that? Budget deficits are probably the most important factor in their determining long-term inflation. But according to Powell, they don't even consider it. And he doesn't even look at the dollar. In fact, not only did he say that he won't comment on the dollar, he was asked what he thought about the dollar's value, right? And what did he think it was going to keep falling? And he said he doesn't know and he doesn't even care. Like, he doesn't follow it. He said, I don't understand the dollar. I don't know why it's valued where it is today. I don't know where it's going to be valued in the future. I mean, how can he not know any of this stuff? I mean, his mandate that he talks about is price stability. Well, another way to think about price stability is dollar stability. It's the purchasing power of the dollar, right? Price stability means that your dollar can continue to buy goods and services at the same rate. Now, they concede now that they're looking at 2% inflation. And so that means the dollar loses 2% of its value every year. And so you need 2% more dollars to buy the same basket of goods and services. But you're still talking about the value of the dollar. Prices are just the flip side of the dollar's value. If the dollar was gaining value, then prices would be going down, which of course is something that Powell does not want, right? He doesn't want prices to go down. I mean, Paris would thought that'd be the dreaded deflation. Prices need to go up, just not too much or not too little, right? 2% is just right, according to the Fed. And so the dollar needs to only lose 2% of its value per year. Well, if that's the case, if the Fed is targeting a dollar that only loses 2% of its value per year, how can Powell claim that he doesn't care about the value of the dollar? He doesn't know anything about it, doesn't understand it, doesn't know where it's going, doesn't even care. I mean, obviously, if the dollar is going down, prices are going up. I mean, how are you going to say that we're in a good place when it comes to inflation and returning to 2% inflation when the dollar is getting killed? If the dollar is getting destroyed against these currencies, at the rate it's going, the dollar could lose 20% of its value against foreign currencies this year. Right? Well, prices have to go up. I mean, foreigners aren't going to cut their prices because the value of our currency is going down. So if we want to keep buying imports, then we're going to have to pay more and more dollars to get them. I mean, that's there. I mean, you don't even have to think about that. I mean, he's trying to figure out how the tariffs are going to impact prices. Well, what about how the weakness of the dollar is going to impact prices? Because it has to impact prices because we are importing. We are buying goods made in other countries, and we pay for them with our dollars. And if the dollar goes down, we need more dollars to buy those goods, unless other countries cut their prices, which they're not going to do. They didn't cut their prices to accommodate our tariffs, and they're not going to cut their prices to accommodate our weakening dollar. But Powell is admitting, which I thought was one of the craziest admissions, that he doesn't care about the dollar, doesn't understand it, and that he's not even going to talk about it because it has to do with the Treasury. It's not the Treasury that's trying to have price stability. It's the Fed. And price stability is dollar stability. You can't have price stability without having dollar stability. You know, one of the other crazy things, too, about these hearings is watching the Democrats just blaming the Republicans for running up the deficit, right? They're correctly criticizing the big, beautiful bill by saying that it adds to the debt, which it does. It adds trillions to the debt that is already going to go up by trillions, right? It's when they keep talking about we're adding 2 trillion or 3 trillion to the debt, that's on top of all the debt we're already adding just before the big, beautiful bill, right? So it's not like the big, beautiful bill only has a couple of trillion of deficit spending. It has a lot more than that because it has all the deficit spending that was already there baked in from the Biden years, right? The Republicans are critical of all the things that Biden did, the terrible things that Biden did. Well, we're continuing all those things because we're taking the Biden budget and just building on it. We're not reversing it. You know, in fact, one of the things that Trump said, I just digress for a second, but he gave another conference on his own. I forget a press, and he was talking about the economy. First of all, he said, we have the hottest economy. He said, America has the hottest economy in the world right now. The hottest economy in the world. Well, if we have the hottest economy in the world, why is the dollar so cold, right? Why is everybody trying to yank their money out of the hottest economy in the world? Because that's what they're doing. right? But then he also said that one of the reasons that it's the hottest economy is because we're building factories all over the country. Like factories are going up everywhere. No, they're not. What is he talking about? I mean, nobody even knows where these tariffs are going to be. Nobody's breaking ground on new factories. I mean, there may be a couple that might have happened anyway, but to say that factories are springing up all over the place is a complete lie. That's not happening. And we don't have the hottest economy in the world by a long shot. But the other thing that Trump did was he blamed Powell for borrowing money short term while he was president. He said, look, because of Powell, we have all this debt that was taken out with short maturities, and now we have to deal with all these bonds maturing, and that's why, Powell is such an idiot and a moron, because if he just cut rates, we could roll this debt over at a lower rate, but now we have to roll it over at a high rate, and so we're still paying for these Biden deficits. Well, Trump did exactly the same thing when he was president. He was there for 4 years, and he had an opportunity while president to restructure the national debt, and as debt was maturing, he had the opportunity to borrow long, to sell more 20-year, 30-year bonds, right? Not one-year bills, and to lock in low interest rates. Trump didn't do that. In fact, when Trump left office, the average maturity on the national debt was shorter than it was when he took office. So he continued that policy. He shortened the maturity of the national debt when he was president, and then Biden did the same thing. But now Trump is criticizing what Biden did when he did the exact same thing. And in fact, he's going to continue to do the same thing now. As bonds mature, they're going to keep the maturity short. They're not going to go for long-term bonds either. Now, we don't have as much of a savings now because the long rates and the short rates are very similar. But he knows that if they tried to sell a lot of long-term rates would really move up, which is what they don't want, because that would really impact the housing market and the economy. So in order to delay that day of reckoning, Trump will continue to do in his second term what he did in his first, which is exactly what Biden did. And Trump is a hypocrite again for that criticism. But what I was talking about before I digress there was all these Democratic congressmen and women are criticizing the Republicans for running up the debt with a big, beautiful bill, which is valid criticism, except not when it's coming from Democrats. Because if the Democrats controlled the House and the Senate, and more importantly, maybe if they had a Democratic president in office now, had Kamala Harris won and the Democrats got the House and the Senate, it's not like they would be cutting the debt. They wouldn't. In fact, the added spending increases that would likely be in the Democratic budget would probably add even more to the debt than the tax cuts of the Republican bill. Yes, they're both bad. They're both going to make the deficit worse. But who are they kidding, right? Criticizing the Republicans for deficit spending when they voted for all the big deficits under Biden, and they would be voting for all the big deficits under Harris had Harris won. But again, the Republicans are guilty of the same thing. All the Republicans, when they were in the minority and when Biden was running up the debt, they were very critical of the budgets. They were opposed to the budgets. But now that they're in power, they're doing the exact same thing that they accuse the Democrats are doing. The same thing with Trump on Powell. When Trump ran against Hillary Clinton the first time, he accused the Fed and Janet Yellen of being political, of keeping rates artificially low to help Obama. And he criticized Yellen for that. That's bad, right? You shouldn't keep interest rates artificially low to make a president look good and to artificially goose the economy. But that's exactly what President Trump wants Powell to do. In fact, he wants to fire Powell because he won't do what he accused Janet Yellen of doing. He wants artificially low interest rates to get another artificial boost to the economy so that he can claim credit for a bubble, although not acknowledge it as a bubble, but just claim credit for fake economic growth. That's what he wants. He was only opposed to fake economic growth when it was Obama's fake economic growth. But when it's Trump's fake economic growth, well, the more the better. Anyway, let me look at, so Oh, another thing that came up, which again was crazy, and he was asked about the deficits. One of the congressmen or senators, I forget who, asked Powell, if he's concerned or if he factors the deficits into their policy making, right? So you're looking at the big, beautiful bill. Do you consider the impact of this bill on deficits? And are you considering the national debt relative to the size of the economy, right? The growth of the economy versus the growth of the debt. Do you factor any of this in? And again, Powell said no. He said that the Fed absolutely does not consider fiscal policy when it sets monetary policy. It doesn't consider the size of the deficit. So in other words, the Fed is going to have the same policy whether we have a big budget deficit or a surplus. Well, if that's the case, then why even cut the deficit? Powell's saying we don't care. Interest rates are going to be unaffected by the size of the debt. Just keep on borrowing money. There's no downside. There's no negative consequence. Of course, the Fed should be considering the deficits in setting monetary policy. In fact, it should be warning Congress. That's what Powell should be doing when he goes to Capitol Hill, is saying, you know what? You guys want lower interest rates. Well, your fiscal policy is ensuring higher interest rates. Because if you're going to keep this loose fiscal policy, I'm going to have to use tight money. I'm going to have to raise interest rates more because you're going to be creating inflationary pressures in the economy by running these huge deficits. I've got to counteract that. I've got to raise interest rates. The Fed should make it clear to Congress, if you're going to run these big deficits, the consequence is higher interest rates. If you're going to have to borrow a lot of money, then the cost of borrowing that money is going to go up. If the Fed basically says it doesn't matter, we're going to keep interest rates low and there's no consequence, you're not going to have to deal with higher interest rates if you have bigger deficits, then why not have them, right? Why, if there's no consequences to running big deficits, then why not run them? After all, it's better than having a level with the public that we got to cut spending and take away some benefits or raise their taxes, right? Why make those hard choices if the Fed enables an easy way out? But if the Fed did its job, if Powell said we absolutely do consider the deficits, and if you pass this bill, we're going to have higher interest rates because we're going to have bigger deficits, that would be a reason to cut spending, to try to avoid those negative consequences. Instead, the Fed has been an enabler of deficit spending. And because the Fed enables the deficit spending, it continues. So we stay on this unsustainable path. I mean, it's crazy for the Fed chairman to criticize Congress for being on an unsustainable path when the Fed is the reason that they're on that path in the first place. If it wasn't for the Fed, the path wouldn't be sustainable. The government would have had to have acted a long time ago to rein in deficit spending if the Fed would have done its job, if the Fed would have actually acted like an independent agency instead of an arm of the government. Another thing that they said too, it just shows you how ridiculous, because even when they go off topic, and Powell admitted that he shouldn't even be talking about this because he was getting out of his lane, but he was willing to do it. Now, I wish he would get out of his so-called lane on something important, but they started talking about student loans and the problem with student loans, which of course is completely created by the government, because without the government, there would be no student loans. I mean, students couldn't borrow money without the government. I mean, who would be dumb enough to lend money to a student? I mean, the student's not going to pay you back. I mean, right? I mean, they don't have any income. They don't have any assets. They're kids. Who's going to loan money to an 18-year-old, 19-year-old, 20-year-old? Now, you might say, well, what if they're going to get an engineering degree, and make a lot of money, or a law degree, or they're in medical school? All right, but what if they're just majoring into sociology of sports or all kinds of Mickey Mouse majors? I mean, most people that graduate college don't graduate with any marketable skills. They just spent, 4 or 5 years, going to parties, getting drunk, chasing girls. I mean, that's it. I mean, they didn't develop their skills, but they borrowed a lot of money. But the only reason they could borrow all that money is because either the government guaranteed the loan or the government outright made the loan, right? So the student loan problem is made by the government. If it wasn't for the government, there would be no student loans. Yes, fewer people would go to college, and that would be a good thing. because fewer people would waste their time and money in college. They would go straight to work or learn some skills. But the people who did go to college would pay a lot less for it because tuitions would be a lot lower if you didn't have all this student loan money bidding it up, right? So the government created that problem. But now they're talking about it without acknowledging the government is the source. And they're talking about the fact that you can't discharge your student loans in bankruptcy. And Powell basically said, I don't know why that is. I never thought that was fair. He said that you can discharge your credit card debt, auto debt, all kinds of debt can be discharged in bankruptcy, but not student loans. And somehow he said that that wasn't fair and that Congress should fix that. In other words, make student loan debt dischargeable. Now, as much as I'm against student loans, government guaranteed student loans, look, if the government got out of it and some private lender was dumb enough to loan money to a student, okay, fine. I'm not, I don't want to ban, loans to students, but I don't want the government getting involved and co-signing them, right? Because that distorts it. But once we've made that mistake, there's an old expression that two wrongs don't make a right. And once we are making the mistake of allowing these student loans, we can't make another mistake of allowing students to discharge the loans in bankruptcy. Imagine that. Because when you're a student, let's say you graduate, you're 22, 23 years old, and you have $100,000 in student loans, you're basically bankrupt. I mean, almost every student with college debt graduates bankrupt. So why wouldn't you just immediately file for bankruptcy? I mean, if you can discharge your student loans in bankruptcy, well, everybody's bankrupt. You owe $50,000 or $100,000. And what kind of assets do you have? You don't have any assets. I mean, maybe you own a car, but you probably have a loan on it. I mean, your clothes don't count. Your stereo or your laptop or your iPhone. You don't have any financial assets. You're a student. You're a kid. You have debt. So your balance sheet has 50, 100,000, 200,000 of debt and like no assets. So if you could discharge your student loans in bankruptcy, well, then everybody would discharge them. So nobody would ever pay them back. But not only is it a moral hazard on the borrower who would simply, graduate and then file for bankruptcy immediately and have a clean slate. I know some people say, well, why would you want to wreck your credit? Hey, you know what? I think a student that has no debt and just went bankrupt, I'd rather loan to that guy than a student that's got $100,000 worth of debt that he has to pay, right? Because he's encumbered. I'd rather loan money to a student who had no debt. And remember, once you go bankrupt, you can't do it again for a while. So once somebody has actually gone bankrupt, they're actually a better credit risk than somebody who's struggling with debt and may go bankrupt in the future. Much better to loan to somebody who's wiped out all their debt. But not only would allowing students to discharge their debts in bankruptcy, not only would that be a moral hazard for the student, but what about the colleges? The colleges could market that. Hey, yes, we tripled your tuition. You now have to borrow $500,000 to get this worthless degree, but doesn't matter because you discharged the whole thing in bankruptcy. So we're going to throw in, something else like a nicer apartment for you to live in or a nicer gymnasium, different things that we could throw in to entice you to come to our school. But if the students know that they can discharge all their loans in bankruptcy, then who cares how much money you borrow, which is perfect for the colleges and the universities because now they're selling a product where the customer couldn't care less what it cost. Because not only doesn't he have to pay the cost, he doesn't even have to repay the loans. So the fact that you can have Jerome Powell actually say he doesn't know why you can't discharge student loans in bankruptcy, it should be obvious why you can't do that. It would destroy the whole program. I mean, college tuition would skyrocket even more. It would be an even bigger problem to have all these debts wiped out. Now, maybe if you said something like, well, after 20 years or something, maybe they could become dischargeable. But even that, I mean, if you know there's a point where you can discharge your debt, well, then you're not going to pay it off. You're just going to make the minimum payments until you can get to the point where you discharge the rest of it. So none of this works. There's just one moral hazard into another. Look, I would be in favor of forgiving student loans at this point recognizing that there's an inflationary cost. There's a cost to doing that. But I would only want to do that if we codified in the law that there will never be any more student loans, ever. No more government student loans, no more government guaranteed student loans. The government has to stay out of that process completely. Because if you forgive student loans, yet leave them in place for the future, you've again created a moral hazard. Because now students expect their loan to eventually be forgiven. Well, if you expect a loan to be forgiven, why pay it off? If you expect the loan to be forgiven, why not take it out? Maybe somebody would have paid cash to go to college, but because they could borrow money and then have the debt forgiven, they'll do that instead. So you actually make the situation worse if you forgive the debt, but then continue the programs. But it just shows you that even something as simple as student loans is beyond comprehension of the Fed chairman, which maybe in that respect, Donald Trump is right. I mean, he's calling Jerome Powell all these names. He doesn't understand that. But the problem is neither does Donald Trump. There is so little understanding in Washington of economics, including the people that chair or that sit on the Council of Economic Advisors and all the top people who are making policy at both the White House and the Federal Reserve seem to be clueless about basic economics, about money, even though they spend a lot of their time at universities earning these fancy degrees. Unfortunately, they really didn't learn too much rather, during that time. But anyway, that's it for today's podcast. Before I go, let me just remind everybody again, we had this pullback in gold and silver today on Friday, a gift horse. I was talking with some of the guys at Schiff Gold, and they're telling me that one of the problems is that our customers are waiting for a pullback. They're afraid to buy a gold at 3,400. Why? It's just going higher. Don't be afraid to buy it. Same thing with silver. How can people not want to buy silver at $36? I mean, that's ridiculously cheap. I mean, yes, you could be upset that you didn't buy it at $25 or you didn't buy it at $30. It's not like I didn't tell you not to buy it, but I'm telling you to buy it at $37 because it's going much higher. And again, it's not that gold and silver prices are necessarily going higher. The dollar is going lower. And look at it. Look at it on foreign exchange markets. It's going down against all the other fiat currencies, but it's going to go down more against real money. So stop waiting for a pullback. And don't worry. Maybe days like today scare people. Oh, gold was down $50. Silver was down 75 cents. It doesn't matter. These declines won't even look, like a blip on a chart when you're looking back a few years from now. They're nothing. This is just noise. You have short-term traders that are getting in and reacting to the news, to the headlines. Oh, there's a ceasefire, sell gold. Oh, we have a trade deal, sell gold. When that happens, you buy gold, you buy silver. You're being given a gift. Take advantage of it. Don't look it in the mouth. And don't get greedy and hope for a bigger gift. Just take what the market gives you and buy these metals. I think the quick buy in platinum, like that big spike, I still like platinum, but it's not the steal that it was when I was getting you guys to buy it below 1,000, now that it's popped 40%. But silver, to me, still has a little bit of downside and massive upside. So you should be buying silver, calling up Schiff Gold, and getting yourself some silver. Also, the mining stocks, they pulled back again today, 3 or 4% drop on the decline. But all these stocks, again, even though they're up 45, 50% on the year, something like that, they are ridiculously cheap. People still don't get what's going on. They have no idea how the game has changed, what's going to be happening to the dollar. And so they don't have any idea how profitable these mining companies are going to be. So you want to be loading up on this. And even though the U.S. stock market is at new highs, we're barely ahead on the year. We're out of the red, but the U.S. market looks like it's going backwards compared to the foreign markets. And that's because not only are foreign markets outperforming the U.S. market, but they have a tailwind of a weak dollar. And so if the euro is up 13% this year, that means you're up 13% on European stocks, even if they haven't gone up. So you have that huge advantage where you've already got a 13% gain before you've got a gain. And so when the dollar was strengthening, yes, that was a massive headwind against global returns. So if the dollar had been up 13%, then European stocks would have to rise 13% just to break even. Well, that's what the Europeans are looking at now in our market. If the dollar is down 13% against the euro, that means a European investing in U.S. stocks have to go up 13% just for the European to break even. Well, why should they invest in the U.S. to break even when they can make more money investing in their own markets and collect higher dividends? So you really need to move more money into our strategy, into the foreign stocks and bonds. My value strategy, contact the reps at Euro Pacific Asset Management about moving an account over. If you've already got an account, adding to it. In fact, the more money you can move out of overpriced U.S. stocks in an overvalued currency like the dollar, the more you can move into better valued foreign stocks and into currencies that are going to rise as the dollar falls, the better. The sooner you can do that, the better. And if you got a little rally in the U.S. stock market, sell into it. But recognize as the U.S. stock market is rallying, the dollar is still falling. And so that is basically undermining your gains. So the gains are nominal, not in real terms. You're still ending up with fewer euros or Swiss francs or pounds or yen to use to buy these foreign stocks. So the sooner you can get out of U.S. stocks, the better. And again, don't forget, if you haven't already signed up at Schiff Sovereign, I've been reading the newsletters that James Hicksman's been writing while I've been away. He writes a lot of good stuff. I look forward to getting those in my inbox. If you're not getting the emails from Schiff Sovereign, make sure to go to schiffsovereign.com and sign up. And you should also give the paid subscription a chance. I think it's only like $9 a month. There's a lot of extra value. In fact, we have a new newsletter that we just launched, Strategic Assets, that has actionable investment advice contained in addition to a lot of other valuable information. So you can also sign up to be a subscriber for Strategic Assets. You can get more information about that letter and other products that we have on the website at schiffsovereign.com. Anyway, next time I do a podcast, I'll be back on land, back in Connecticut. Not exactly sure when it's going to be. Again, the podcasts are, kind of not as frequent during the vacation, but my vacation will be over in the second week of August. So once I'm back home in Puerto Rico, I'll be doing the podcasts on a more regular basis. Right now, I'm still vacationing. I'm not really sure. I'm going to be spending a decent amount of time in July in Connecticut, but I also may be doing some traveling as well, which will complicate the podcast. So, but if you're missing them, look, check my X feed, because I still comment on X, and that's very easy to do rather than recording a whole podcast. So keep if you're not following me on X, do that. And again, also subscribe to the YouTube channel. I still haven't been able to get above the 600,000 subscribers. I've been stuck below 600,000, within 10,000 of that number for like 2 years. Now, some people thought maybe somehow I'm being shadow banned or something. I don't know. But I would have thought I would have gotten above that number by now. I mentioned it on a podcast not too long ago, and I still can't break through there. But I'd like to see if that's possible. So if you're not currently a subscriber to my YouTube channel, subscribe and try to get your friends to subscribe too, and see if I can break through that milestone. Bye for now.